Welcome to the deep dive. Today, we're pulling back the curtain on something really fundamental to financial trust. Auditing standards and guidelines.
Yeah, it sounds maybe a little dry up front.
It can, yeah. But honestly, getting this system is like, understanding the blueprints for how we keep finance honest.
Exactly. Yeah.
And whether you're maybe staring down the CPA exam or you're just curious about how companies or even the government stay accountable, well, this is for you. Our goal today is to sort of demystify that whole alphabet: SUPSAS, PCAOB, AICPA, GAO. What do they do?
Who are they? Yeah.
Right. Who governs what? And crucially, why does it even matter? Because it really, really does.
Absolutely.
But before we really jump in, just a quick reminder. This deep dive is based on material from Farhat lectures. All the content, the examples, explanations, it's all derived from the great resources over at farhatlectures.com. So whether you're a student, a CPA candidate, or already a professional, definitely check out the website. Lots of practice questions, video lectures, great support to really nail down today's topic. And a big thanks to Professor Farhat for providing all this great material.
Yeah, great stuff over there.
So, okay, let's kick things off. Picture this. An auditor walks into a company. What happens next? Do they just start looking around?
No, definitely not winging it. There's a very specific rule book, or blueprint as you called it.
Right.
But crucially, it's not just one rule book. It totally depends on who they're auditing.
Okay.
So we've got three main sets of professional standards for financial statement audits. First up, statements on auditing standards, or SAS.
SS, okay.
These come from the AICPA, the American Institute of CPAs, specifically their auditing standard board. Now, the key thing, SAS applies to non-issuers.
Non-issuers, so private companies.
Exactly. Think Wegmans, Wawa, your local big construction firm. Companies that don't sell stock to the public.
Gotcha.
And SAS covers their annual reports, their interim stuff, quarterly financials, and also things like letters to underwriters, which are basically comfort letters for banks when they're maybe issuing debt.
Okay, so SAS AICPA equals private companies.
You got it. Then, for the big guys, the ones on the stock market.
Like Amazon, Microsoft.
Precisely. For them, we have the PCAOB auditing standards. PCAOB stands for Public Company Accounting Oversight Board. The public is the giveaway.
Ah, okay. Makes sense.
They issue the standards for public companies or issuers. Again, it applies to those same kinds of things. Annual reports, interim financials, letters to underwriters. But the standards themselves, often more rigorous.
Why the difference? Just because they're public?
Well, yeah, basically. Millions of people might own their stock. There's a much broader public interest, so the oversight needs to be tighter to protect investors and keep the market stable. Sarbanes-Oxley really drove that home.
Right, of course. Okay, so SAS for private, PCAOB for public. What's the third one?
The third bucket is for government entities. That's where generally accepted government auditing standards, or GAAS, come in, sometimes called the Yellow Book.
GAS, okay, issued by?
Issued by the GAO, the Governmental Accountability Office. And GAS applies to, well, government, federal, state, local agencies, government programs. But also, and this trips people up sometimes, it can apply to private organizations if they receive significant government funding.
Oh, interesting. Like a nonprofit getting a big federal grant.
Exactly. Or I remember my very first audit ages ago was for a private apartment building, but they got HUD funding, Department of Housing and Urban Development. So bam, we had to follow GAS.
Wow, okay.
And GAS isn't just about the money, the financial audit. It also covers performance audits, like, is this government program actually working efficiently? And looking at program activities, it's all about accountability for public funds.
That's a fantastic breakdown. So it really, really boils down to the type of entity, doesn't it? Private, public, or government. You got to pick the right rule book.
Absolutely critical. Using the wrong standards would be a massive problem. Imagine auditing Amazon using SAS. Huge compliance issues.
Yeah, I can only imagine. Okay, so that covers the big three for audits. But CPAs do more than just audits, right? What about those other services?
Oh, definitely. Audits are just one piece. There are other important standards. For example, the AICPA also issues statements on standards for attestation engagements, SSAE.
Attestation sounds broader than auditing.
It is. An audit focuses specifically on historical financial statements. Attestation is broader. It's about a CPA providing assurance on pretty much any assertion or subject matter made by a client.
Like what?
Could be anything, really. Compliance with regulations, the effectiveness of their computer system controls, maybe even confirming calculations for sustainability reports. It's about issuing a report on the reliability of something specific. Examination, review, agreed upon procedures fall under this.
Okay, so SSE covers those broader assurance gigs. What else?
Then there's a really important one, especially for CPAs not working at the huge firms. Statement on Standards for Accounting and Review Services, or SRs, pronounced SARS.
SRs, okay. Also AICPA.
Yep, AICPA again, but a different committee, the Accounting Review and Service Committee. And here's the key difference. SRs applies to unaudited financial statements or information, primarily for private companies.
Unaudited, so less assurance than an audit.
Way less. SRs covers things like compilations, basically just taking the client's numbers and putting them into financial statement format, no assurance given at all, and reviews. A review involves some limited procedures, mostly inquiry and analytics. It gives limited assurance saying nothing major looks wrong, but it's definitely not an audit.
Why are these so important then?
Because tons of small and medium-sized businesses need them. They might not need a full expensive audit. Maybe they just need financials for a small bank loan or for internal management use.
Ah, I see.
Compilations and reviews are the bread and butter for many local CPA firms. That's why they're like highly, highly tested on the CPA exam. You absolutely have to know SRs. It also covers preparing financial statements or doing pro forma compilations.
Good to know. So we've got SAS, PCAOB, JSS for audits, SSAE for attestation, SRs for comps and reviews. What else guides a CPA?
Well, beyond the specific engagements, there's the overall conduct. The AICPA issues the Code of Professional Conduct.
Ah, ethics and behavior.
Exactly. This applies to AICPA members, individual CPAs. It dictates how they should act professionally, maintain independence, integrity, objectivity. It's about upholding public trust in the person.
Okay, so that's for the individual accountant.
Right, and then there's a related standard for the firm itself, Statement on Quality Control Standards, also AICPA.
Quality control, how's that different from conduct?
Quality control standards apply to the CPA firm as a whole entity. It requires firms to have systems, policies, procedures in place to ensure they're doing high-quality work across the board, making sure engagements are supervised properly, staff are competent, ethical requirements are met, reports are issued correctly.
So conduct is the individual's rule book. Quality control is the firm's operating system for quality.
That's a great way to put it, yeah. One's micro, one's macro, kind of. Both aimed at ensuring reliable work.
That's really helpful, that distinction. It shows just how layered the oversight is. Okay, so we have standards for audits, other engagements, individual conduct, firm quality. Phew, that's a lot of guidance.
It is.
So if you're an auditor or maybe a regulator and you're looking at a situation, how do you know which standard carries the most weight? Is there like a pecking order?
Oh, absolutely. Having the ultimate roadmap for the rules.
Okay, lay it on us. What's at the top?
Highest authority, no question. It's the SS from the AICPA for private companies and the PCAOB auditing standards for public companies.
Those main audit standards we started with.
Exactly. They are the top tier. You absolutely must follow them.
Right.
If you ever depart from SAS or PCAOB standards, you better have an incredibly strong, documented justification. The burden of proof is entirely on the auditor.
Okay, top tier. SAS and PCAOB. What's next down?
The second level, still very authoritative but considered interpretive publications, includes things like the GAAS, those government auditing standards.
Interesting. GAAS is tier 2.
Yep. Also in this tier are other AICPA guidance, like their specific auditing and accounting guides and AICPA statements of position. You see the AICPA popping up again here.
Right. So interpretive guidance still pretty heavy?
Definitely. You wouldn't ignore it lightly. And then there's a third category.
Okay, what's down there?
This is other publications, or lower level authority. Think articles in professional journals, like the Journal of Accountancy, AICPA letters that aren't formal standards, even things like continuing professional education materials. CPE and textbooks fall into this category.
Textbooks, huh?
Yeah, and the source material we're using even makes a little joke that, resources like YouTube videos, while potentially helpful, are way down at the bottom of this category. They follow the more authoritative stuff, hopefully.
Huh. Okay, so YouTube tutorials aren't trumping PCAOB standards anytime soon.
Not a chance. The key takeaway is, if you need the absolute definitive answer, you go to SAS or PCAOB first, then the interpretive stuff, then the other publications.
That hierarchy makes a lot of sense. It provides clarity when there might seem to be conflicting advice floating around. It tells you where the buck stops, basically.
Precisely.
Wow. Okay, so we've really covered some ground. We went from the basic, like who audits whom, public, private, government, using SAS, PCAOB, or GAAS, to all those other things CPAs do under SSAE and SARs, like attestation and reviews, and then the ethical conduct rules and firm quality control.
Right.
And finally, tying it all together with that clear hierarchy of authority, it's quite a system.
It really is. It has to be to maintain trust.
And I think the real value here, it isn't just about memorizing acronyms for an exam, although that's important for candidates,
Sure.
but it's really about understanding the kind of the bedrock, the foundation on which financial reporting and trust are built. It shows the complexity, the nuance that goes into ensuring accuracy and ethics. These aren't just arbitrary rules.
Not at all. They're the framework that makes our economic system function with some degree of reliability. And, thinking about all this established structure, it does raise a really interesting question for the future.
Oh, yeah.
Well, think about how fast business is changing. Technology like AI, blockchain, it's altering how companies operate, how financial data is even created and tracked. So how do these standards, these blueprints we've talked about, keep up?
That's a big one. How do you audit an algorithm or verify transactions on a decentralized ledger using rules written maybe years ago?
Exactly. How does this framework adapt? And what could that constant challenge mean for the future of financial oversight, for investor protection, for that very trust we've been discussing?
That is definitely something to chew on. A real challenge for the profession and the standard setters. It shows this whole field is definitely not static.
Not in the slightest.
Well, thank you for joining us on this really illuminating deep dive into the world of auditing standards. Hopefully it sparks some curiosity.
Hope so.
Keep exploring, keep asking those tough questions, and we'll catch you on the next deep dive.